Okay, the name of the presentation is Why is the Euro so high? I'm Yohay Elam from Forex Crunch. Sound is okay, audio and video. Okay, so I used to be a retail trader and also a computer programmer. In the past, I founded Forex Crunch back in 2008. The focus of my site is about fundamental analysis. I'm originally from Israel, but I lived in Barcelona in the past 2 years. So I have a few insights also on the situation in Spain. What we'll talk about is why the euro should be much weaker than it is. We'll explain shortly why it is actually high. And then we'll explain why. And at the end, I'll provide a speculation about when this situation could change. Okay, so this is a map of Spain, where I live in. As you can see, the level of unemployment varies from region to region, but in general, this is a terrible situation and quite unbearable. I'm surprised to be living here in Catalonia, in Barcelona, where the unemployment level is 24.5%, and the streets aren't packed with people all the time. The unemployment rate in general in the Eurozone is 12.2% and 27% in Spain. I'm not an active trader answering to questions. I chose Spain because the lifestyle here is still good, and as long as I have income from foreign sources, my situation is okay here. Okay, but let's go in. In general, careers end before they begin in the Eurozone. Youth unemployment is 23%. In Spain here it's 57.2. The chart you can see here shows how youth unemployment has skyrocketed in the past few years since the crisis. In Greece, in Spain, in Italy, and also in France it's going up. In Germany it's going down. This is a bad situation. Here are more depressing figures. We've had a few quarters of contraction. It's 1.1 annually. Retail sales are falling at the same levels. Consumer confidence is negative, minus 22 points. The manufacturing purchasing managers index is showing contraction for nearly 2 years, and also services is contracting for over a year. 5 countries have already got bailout programs. Greece got twice. In May 2010, that was the really big crisis, and then again with the private sector involvement in 2012. Ireland in November of 2010, Portugal in April 2011, and Spain had a limited bank bailout last year. The most recent one was Cyprus in March, which had a few dangerous precedents. We'll reach that very soon. And just another comment about that. Each time there was a crisis in one country, it served as an existential threat to the whole euro, to the project. There were doubts if the euro would go on. This is not something that happens with other currencies. Anyway, there weren't really good resolutions. Greece is in depression, undergoing a recession for a very long time. Unemployment rate is near 27%, youth unemployment around 70%. Now, in 2013, finally the IMF admits it made mistakes and broke its own rules in the Greek bailout. Greece underwent the biggest restructuring in history, at least since World War II. Nevertheless, it's the 9th place in the world in militarization compared to its GDP, so there's not... Austerity isn't seen everywhere, and definitely mistakes have been made. Cyprus, the dangerous precedents I just mentioned. Actually, there are still capital controls in place. Not everybody can take money out of the banks or transfer it abroad. Is this really a monetary union where people can't use money really freely? Anyway, there were statements that the Cyprus precedent isn't a template, but actually it is. The laws are put into place and that will allow taking money from bank accounts in the future. The whole idea of taxing insured accounts, and the Eurozone accounts are insured up to 100,000 euros, is a bit scary for me personally, and I think it should be scary for every person that has a bank account in the Eurozone. Let's continue. Spain, where I am now, one of the more annoying things that happened here, in June 2012 there was a big European Union summit, and the leaders talked about breaking the vicious cycle between banks and sovereigns, but then in September 2012 a few northern countries, just 3 months later, decided that it doesn't include legacy issues, that means Spanish debt. So the problems with the Spanish banks are a problem of the Spanish people. And actually the government debt here wasn't that high. It isn't the case of Greece. But by adding the debt of the banks, it's going to get worse. There are hidden losses on the bank's balance sheets. Everybody knows that. And the measures they took here to fight the crisis didn't really work, like hiring the VAT, it's called IVA here, just lowered the tax revenue. Portugal is on the brink of another bailout. They're hardly making it. They also discovered surprising debts in the Madeira Islands. And Ireland, which was the poster child of the austerity measures, the bailouts, also still suffers a high unemployment rate of 14% and is blamed, allegedly, to work as a tax haven. Okay, and there's also discontent from all sides, not only in the poor countries, but also in the rich countries. Many people in Germany think that Germany is paying for everybody else, even though it's, at the moment, these are just loans. A new party has emerged in Germany, Alternative für Deutschland, Alternative for Germany, and it's threatening to take votes from Merkel. The party is gaining traction. In France, another core country, nearly 2/3 of French people think the EU is headed in the wrong direction. The election of Hollande didn't change the situation. I think many people are despair and feel there's no real difference between left and right. Anyway, and in Italy, the Eurozone's third largest economy, the biggest single political party, led by Beppe Grillo, the ex-comedian, wants a referendum on the euro. In general, the debate about the existence of the euro has reached mainstream newspapers, as here in Spain, in El País, but also in other countries where the euro seemed holy so far. Here's a picture of the bestseller in Portugal. Title says, "Why We Need to Leave the Eurozone. Necessary Divorce to Get Portugal Out of the Crisis." So, anyway, the Eurozone suffers from an existential crisis. And let's compare the situation to the United States. It isn't a glamorous situation, but there's still ongoing growth, steady and slow, but it's going on almost 4 years. Unemployment rate is, it rose to 7.6%, but it's significantly lower than 12.2% of the Eurozone. Consumer confidence is rising. The composite PMIs are positive. They point to growth. The United States, there's an ongoing discovery of shale gas and oil. It's an energy breakthrough that will allow the United States to become or move towards energy independence. And there's no existential threat to the US dollar. Nobody thinks that the US dollar will disappear in the next few years. Or maybe somebody thinks about that, but it's a small minority. So let's look at the prices. The euro dollar is high. It ended 2010 at 133.83. Ended 2011 just under 130. And 2012, 131.80. Not big differences. At the moment it's trading with a 133 handle. It did go up and down during this time. It wasn't all the time flat or totally stable, but in general, the general picture is a very stable and solid euro despite all these problems. Recently, during April and May, when the US dollar strengthened before it reversed, we've seen it show strength against other currencies such as the pound, the Aussie, Canadian dollar, New Zealand dollar, and of course the Japanese yen. things have been changing lately, but with other currencies, with the strength of the dollar, but the euro remains very, very solid. Another way to look at it is the even bigger picture is we've seen bank estimates that saw Greece leaving the Eurozone, that saw euro-dollar reach 110, 115. It never even reached the launch value of 117 from 1999. The lowest was 1876 at the peak of the Greek crisis. Okay, I'm going to try to show a short video. This is the defining moment when Mario Draghi said, "I'll do everything it takes." Not sure you can hear this. Okay, I don't know if you heard that, but anyway, he said the ECB will do everything it takes to preserve the euro, and believe me, it will be enough. That was on July 26th, 2012. That's Mario Draghi, the president of the European Central Bank, and that was a defining moment in the crisis. The euro reached the 120 handle and began moving up from there. This is the moment that things became serious, and the European Central Bank provided a bazooka. The ECB backstop, after presenting it on July 26th, just before the Olympic Games, followed up with presenting the general idea that ECB would buy bonds in August, and then in September he detailed the OMT, outright monetary transaction. Basically, it says that if a country asks for a bailout and receives it, the ECB will be ready to buy bonds. Since then, bond yields of Spain, Italy, and other countries were falling across the board. These countries raised money much more easily in the markets, and in the last rate decision, or before the last one in May, Mario Draghi was patting himself on the back, very happy with himself, saying that's the best monetary policy decision ever made. This is a bazooka. Means it was never used. It's just there, and it helped ease the crisis, at least by some time. The second reason, if you hear Ben Bernanke, this is a big week in the United States. This is an image of Helicopter Ben, quite amusing, I find it. Now we're talking about tapering, but there was a lot to taper. In March 2009, he offered more than $1 trillion, and then in QE1 and QE2, 600 billion, and from September 2012, 40 billion, and then he followed up with QE Infinity, or QE4, from December 2012 of 85 billion US dollars of bond buys per month. This is a lot. Now there's a chance that he'll hint about tapering. Tapering means that the Fed will buy bonds at a smaller rate, but it doesn't mean that this isn't exactly monetary tightening. It's just loosening in a more loose way. So this money, this dollar printing, here's another image of Ben Bernanke and the helicopter. It goes everywhere. The idea was officially to lower bond yields, encourage long-term lending, lower mortgage rates after interest rate tool was exhausted. Central banks usually lower the rates when things get bad and raise the rates to fight inflation when the economy is doing better. But interest rates have reached zero a long time ago, and the Federal Reserve does more to help the economy. The side effect, of course, is that with this printing money, money goes elsewhere and everywhere around the world, to U.S. bonds, to stocks, to commodities, and also to the Eurozone. And another part of the world is doing basically the same. This is a picture of Japanese Prime Minister Shinzo Abe. He was elected in December and declared a fight on deflation. He wanted to end the last decades of Japan that hardly grew for many years, and see the economy move in general. But Japan isn't doing that bad. They have an unemployment rate of 4.5%. So, don't know. They're doing well without too much growth, but that's a side note. This has cost them a huge debt to GDP ratio, much worse than Greece, 235%. Luckily for them, most of it is held inside the country. So he first announced fiscal stimulus, programs to improve infrastructure after the disaster 2 years ago, the tsunami, the nuclear disaster, and also appointed Haruhiko Kuroda, I hope I'm pronouncing his name correctly, as the governor of the BOJ. And Kuroda is here. These are two funny pictures I found of him. Anyway, on April 4th, he declared a big plan. He wanted to... the monetary base is expected to reach 60 to 70 trillion yen. When comparing the level of QE to the size of the economy, this is huge. He also loosened some of the limits the BOJ had on itself and announced immediate interventions in bond markets to calm them down. Now, this speculation, of course, weakened the yen for a few months, and the new decisions also made people think that money is going to flow out of Japan and into the Eurozone, among other places. And Japan releases every Thursday data about where the money goes, and it doesn't happen yet. The money doesn't flow from Japan to the Eurozone, or doesn't flow outside of Japan that fast. But the perception of Japanese money coming into the Eurozone helped keep up the euro as well. Okay, another country in the middle of the Eurozone, actually, but not part of it, Switzerland. They have an unemployment rate of under 4%, but they're suffering from deflation. So they decided to encourage growth, help exports, and since September 2011, it's nearly 2 years now, they pegged the Swiss franc to the euro. Euro Swiss is limited to 120. This has been a very successful intervention so far. So at first the Swiss National Bank buys euros, and then the money flows also elsewhere. But this is also a supportive factor of the euro. The world in general doesn't condemn Switzerland for doing that. I suspect that it's because Switzerland has bank accounts, secretive, and politicians prefer to remain quiet, but that's just speculation. They're not giving Switzerland a hard time like they're giving Japan or other countries that intervene in currency markets. Fifth reason is the currency wars. Here's a picture from the German Weimar Republic of the early 20s. Germany is obsessed with the issue of inflation, and they're not ready not to print money and not anything in this direction. The only program the ECB did do at the end of 2011 and beginning of 2012 is the LTRO. They lend money to banks, and these banks use the money to buy bonds or do other things. Helps keep liquidity up, and it was seen as an indirect way of doing QE. But it's not exactly the same because these are only loans. And in recent months, banks have begun repaying QE. So it was total size of about 1 trillion euros, but 16% has already been paid back, and this money didn't really flow outside of the Eurozone so far. In addition, contrary to other countries, Europe didn't have a zero interest rate. Mario Draghi lowered the interest rate in May, if I remember correctly, to 0.5%, but it was after the crisis it stood on 1% for a long time. The predecessor of Draghi, Jean-Claude Trichet, the Frenchman, even raised the rates in 2011 in a decision that I think was quite bad. Anyway, the ECB officially has just one needle in its compass, fighting inflation. I think it's a bit of a chaotic fight, and so they aren't into printing money. This might change, but This doesn't happen at the moment, while other countries are intervening. Germany so far has enjoyed the crisis. Germany would have had a much stronger Deutschmark if they weren't in the Eurozone, and while for many countries the euro is relatively high, for Germany it could have been even much higher, and they enjoy lots of exports to China. This helps secure a surplus in the trade balance, and this also brings more money into the euro. The seventh reason I'm presenting is oil money. Oil prices have been relatively high. Middle Eastern countries have been diversifying revenues from oil sales, which are still in dollars, still in the only one reserve currency we have in the world, but money then diversifies, moves away to other currencies, especially the euro. I'm taking this information from the great sites Forex Live and FX Briefs, which I recommend trying out. Okay, so presented many reasons for the euro to be high. Now let's see when this could change. Elections are held in Germany on September 22nd. That's 3 months from now. This might be a changing point from the elections onwards. Merkel, towards the elections, I believe, will want to be more strong, to show a firm position, especially as bailouts are not popular. Merkel has an image in many places in Europe as an octopus. People don't like Germany, people don't like Angela Merkel because of the austerity measures, of the suffering that is seen here and in Greece and other countries. At the same time, she's relatively popular in Germany, and she doesn't have anyone challenging her. So I don't think Merkel is all that bad. What I did find in her behavior is something not of an octopus, but of a chameleon, an animal that changes its colors whenever possible. When she was young, she identified with the communist regime and then turned capitalist. She's a leader of the center-right party. She supported nuclear facilities until the Fukushima disaster and immediately changed her mind. She adopted leftist policies by setting a minimum wage. In general, she sees what's going on in the German public and sometimes copies the opinions of her rivals. It's easy for her to change her mind. One of the things that led to the hard decisions for Cyprus was pressure from the public and from her rival Socialist Democrat Party. Although she has opponents in the Social Democrat Party, but they don't have a strong leader, in my opinion, that's going to replace her. So I believe she will change her mind or change the way austerity is made after the elections. I think she can do that. Also on austerity, also on inflation. Let's see. Merkel looks at herself also in historic proportions and wants to leave a good legacy. She doesn't want to be seen as the destroyer of the euro. The euro is the symbol, or an important symbol of the European Union, of the post-World War II peace. As I've mentioned before, a relatively weak euro helps Germany, and the breakup of the euro could cost Germany around 3 trillion euros, according to internal calculations. And just a reminder, about 8 years ago, in 2005, Germany was considered the sick man of Europe. Germany seems very strong now, low unemployment rate, booming economy, but this could change. Banks are still exposed to peripheral countries, so they could even collapse. And there's an opportunity for a new policy just after the elections. If the German public will not like her at first, she still has time to get re-elected. She has 4 years. On the what can Merkel do? On the monetary front, the ECB has a lot of influence on the German government has a lot of influence on the ECB. They could allow the ECB to go for QE. not LTRO, not a lending scheme, not any other thing, just pure QE, the ECB printing euros and buying bonds. That will help relieve the debt crisis, in my opinion, doing the same like the Fed and the BOJ. Another thing is allowing for German inflation. Inflation is another way to erase debt, not something people talk about loudly, but this could be a very big turn, especially for the Bundesbank, but if she allows for a bit of inflation in Germany, it could help other countries, and they could in turn buy more stuff from Germany. And allowing the ECB to be a lender of last resort, something banks in other places do. On the debt crisis front, she could go with public feelings and abandon austerity, and doing policies that are growth-friendly for the real economy, infrastructure, or other things. I'm sure there are many things they can do, and not only cut spending, but increase spending. And another hard thing for the German public to accept would be to write down debt for Greece, Portugal, and Ireland, or maybe other countries as well. Write-downs of debt, even if it'll cost the German taxpayer some money at the beginning, it'll allow these countries to get back to growth, and this will also help Germany. And another thing that did happen in the United States immediately after the crisis, small banks did fail, did go under. It hardly happened in Europe. If it would happen here, and not instead of creating institutions that are too big to fail, it would be helpful. It doesn't need much to send the euro falling down. I think just a wink, just a hint to the ECB, to the European Central Bank, to begin QE could send the euro crashing, because it would be a big change in policy. Of course, all the steps I mentioned, which some are far-reaching and not that probable, will help even more. Like with Abenomics in Japan, starting a new policy doesn't mean that the euro will crash immediately. The yen fell, but now, as we see it has recovered. And a crash of the euro, if Merkel changes her mind just a bit, somewhere in the fall towards the end of this year, it could be aided by tapering of QE in the United States, which might happen towards the end of the year, and it could, together with a stronger dollar, the weaker euro, we could have euro-dollar fall faster. Criticism, of course, I'm sure she'll be criticized in Germany, but not outside, not after the UK is doing QE. Switzerland intervening in currencies, what Japan is doing everywhere, and emerging countries intervening. So a little bit of QE in Europe will be accepted by the outside world, and I think will go relatively smoothly in Germany. That's it. I have here my contact details, and that was my presentation. Thanks for being here. Now I'll look at the chat box and try to answer some questions. Okay. Anyone have any questions? I see here responses which are relevant to other countries, other webinars, sorry. Labor costs risen in Germany. Yes, they've risen by 4%. There have been decisions, agreements signed between labor unions and other places. I think it can go even higher. Basel III have to do with what's happening in the EU. I think Basel III is a bit more in the distance. It does have an impact on deleveraging of banks, but I think the impact on the Eurozone will be limited. Inflation will come at some point. So far, with all the QE in the world, there is much more chance of deflation. We've seen prices fall in the United States, in the UK. Japan's success with fighting deflation is so far limited. Inflation in Germany fell below 2%. I think they can allow it to rise to even 3%. before getting pressured. Greece, ninth military. This refers to when you compare the investment in military compared to the GDP, Greece is ninth in the world. Israel is number one, unfortunately. ECB mandate. Yeah, the ECB's mandate is to hold inflation at 2% or a bit below. That's the official definition. But during many periods, it has reached 2.6, 2.7%. And of course, the ECB's mandate can change. Nothing is holy. It's a decision made by people, and people can change their mind. Short-term levels in the euro. I think that the peak of 2013, 137, is an important line on the upside. Of course, 130 currently is on the downside, and 134 also on the upside. 128 is an historic level on the downside, and 120, of course. I have a solution. No, I don't have a solution for unemployment. I wish I knew. I think at this point there should be a bit more stimulus, a bit more government spending, but a bit of more loosening of labor laws, especially here in Spain. It's a complicated issue. I think it has to be tackled from both ways, from socialist angle and from a capitalist angle as well. The things here are complicated. And if everyone is weakening their currency to improve. Okay. Yes, everybody wants a weaker currency, but they can't. Not everybody can get it because everything is relative. I think nobody will get the perfect balance of the currency, but so far Europe hasn't been doing any efforts to weaken its currency. It is hurting exports, so I think they should just join the game and find a better balance for themselves. Yeah, in 2008, 2009 it was 160. So in comparison to that era, it's not. It's of course lower, but the general average of the euro has been around 133. So which is what we see now. So and with all the debt crisis, I would have expected it to be much lower. Eurozone has the strongest exportive balance of all. Yeah, but it's a big difference. There's a big gap between the north and the south. So while Germany has exports to China, it has less exports inside, and eventually the issues of there will be negative contagion from the weaker economies to Germany. So I think it'll become a problem. It's in a nutshell. While euro remains all the reasons I mentioned before keep the euro up, but generally I think the most important issue is just not participating in currency wars. Well, everybody else is doing it. That's in a nutshell. And a few weeks ago, no one expected it to retest 137. I didn't see these forecasts a few weeks ago. They didn't exist. So if on Wednesday Ben Bernanke doesn't change his decisions, it could reach 137, quite easily. But I believe they will provide some kind of hint, and it will not reach 137. But it's speculation, of course. But euro being up as USD down. I'm not sure I understand this question. What about you? In currency war, everybody's doing QE or directly intervening in currency markets. The US, the UK have QE programs. Japan has as well. Japan has intervened. Switzerland intervened. Few countries in emerging markets have intervened. These are the currency wars. Some are direct and some are indirect. Well, I think the euro is strong not only against US dollar. I've focused on the US dollar because it's the biggest trading part. No, it's the most important currency in the world, but and that's the most popular pair as well. But I think it has been relatively strong against other currencies as well. and so I focused on euro dollar, but the strength of the euro applies everywhere. Oh, I just now found the camera. I should have started this earlier, but this is how I look like. Anyway, you can see me. Any more questions? I'll be glad to answer. For years, China has been keeping this. Yeah, China has been. Look up. Okay. So China has been considered a currency manipulator, and this issue was raised in the U.S. elections by Romney. I think. Yes, China did manipulate its currency for many years, but with the current situation in the global economy, I don't think that the Chinese yuan is undervalued at the moment. So China's been doing it for years, but now I think they found balance, and there's a bit of inflation in China, or there has been a few years. So yes, China has been manipulating. It's been part of the currency wars, keeping the peg to the US dollar and letting it go just slowly, but I think it'll. I think now it's balanced. Do you think that only FX traders drive FX rates? No. No. Central banks drive currencies, importers, exporters, also traders, rumors, of course. I deal with rumors many times, and. So everybody has self-interest. Yeah. Every country takes care of itself, trying not to anger its neighbors. Japan has been intervening, but then making more softer statements. And China did that as well. I mean, letting the Chinese yuan get stronger just before international meetings like the G20. So everybody takes care of itself. German exporters are ready to sell dollars and keep euros. Yeah, it depends a lot on. I think German exporters will adapt themselves to a changing situation. Euro has a future. Yes, I do. I think the euro has a future not only because they'll find a way to lower its value and to make it more stable and more solid and to solve the debt crisis at one point. But I think the euro is a political project, and there's a lot of interest to keep this political project going on. It's a symbol of unity, and even if it hurts countries like I've shown Portugal, the best seller is why we should leave the euro. I think eventually politics will win over economy, and hopefully the economic decisions will catch up. Right now, the euro dollar can decide which way to go. Well, the most important event this week is the decision in the United States about the rate decision, which is accompanied by a press conference by Ben Bernanke. So I think that's the biggest event. It's on Wednesday at 6 GMT. That's 8 in Europe, or 2 p.m. in the United States and the Eastern Coast, and I think that's the most important event. And the markets, I believe, will stay relatively solid until this statement. FX spot market be around. Yeah, I think so. Why not? Forex, I think, is here to stay. I think it evolves all the time. The technology goes up, regulation improves. Well, regulation doesn't improve everywhere, but I think Forex has a future. I think the industry is maturing, and education is maturing. Will we be broke? Oh, well, some of us will be broke, some of us not. Hopefully we'll all trade carefully and not be broke. UK keeping GDP not. I think it's more of a political decision in the UK. more a thing of national pride. So far, with the current crisis, it proved itself. The pound could weaken more than the euro at some point during the crisis, and this independence kept the pound, kept the economy in the UK doing a bit better than Europe. I think it did help, but eventually, part of the political union will include the UK joining in the euro. I don't think the UK will leave the EU. I think it's just political games and part of the negotiations between the UK and the Eurozone. Take a sip of water. Practical decision about economic offshores. I think they'll do some minor changes, but eventually people who are close to politicians are those having money in tax havens, so I don't think there will be any more theoretical decisions than practical ones. More statements and very small changes than practical ones. Scotland's independence. I don't know too much about that subject. Living here in Barcelona and Catalonia, people look up to Scotland, and at the next move, many people want independence here as well. Generally, I think if I don't know. I think it could work in a few years, but I don't know if it's better for the Scots or not. Don't have a real opinion. Next is, have you learned Spanish? Yes, I have. Not perfect, but I speak Spanish. This time you will have euro 1-to-1, maybe. My speculation is that the euro will fall, but I don't know if it'll reach parity. I think 120 is a first level before the launch of 117 and parity. And strength of the Spanish economy, mixed reports, yeah. I think the situation isn't really getting better. Tourism is certainly getting better. My anecdotal evidence from here in Barcelona is I'm living here for 2 years, and there are many more tourists every year. So this is the only sector I think is growing. The other ones are in a sort of standstill. The economy can get better, but there need to be labor reforms. There are 2 tiers of job markets. There need to be lower value of the euro will certainly help the Spanish exports. I think the road is still long. Spanish politicians said that there will be a big turnaround in Q2. I doubt that. They promised many things, and I think it's going. I'm more pessimistic for the next 6 months at least. It feels like the Brits have a lot of internal problems. The economy in the UK is not doing that bad. Employment level is not that weak. But they don't like the EU, and I think it's also a way of blaming an external enemy for one's own issues. I know that from my country. No, I didn't come to Barcelona to be close to FX Street, but it's an advantage. These are really nice, great guys, and have various types of cooperation with them. My wife and I moved here because she speaks Spanish, and the weather here is great. But yeah, being close to Forex Street is an advantage. Next presentation, I don't know. Actually, it's the first time doing a presentation, a webinar, so I can't tell you what will be next, but I'm open to suggestions, requests, questions, whatever. BCN is awesome, yes. La vida es chula in Barcelona. So British euro. Fixed rate term, account balances, currencies, yeah. Well, yeah, 140, I can't rule that out. If nothing changes, the surpluses will, and especially if QE in the United States will continue, could see 140, 150. I believe things will change, but that's only my speculation. My wife is from Israel, but she speaks Spanish. Okay, lucky. Yeah, and life is good here. Although games of Balsa are expensive. How long you trading? At the moment, I do not trade. Oh, thanks very much, Andre. I'm not trading at the moment. I used to trade part-time when I worked as a computer programmer. At the moment, I'm busy full-time with publishing, with my website. So I don't trade. I think that if I would have traded, my nose would be stuck to the screen and I wouldn't be able to write. My character is not perfect for forex trading. Thank you very much for all the kind words. I think at some point interest rates will rise, yeah. Okay, so now I know I'll be back in July with another webinar. Cool. I'll be glad to do that. Thank you very much, guys. Very kind words. I'm blushing. Thank you. Thank you very much. Hope to see you at the next webinar. Oh yeah, that's my page. And you can see on the presentation the contact details, of course the website, Twitter, you're welcome to follow. And follow me on FX Street. And thank you very much for attending. Hope you enjoyed it. Anything else? More questions? You can send me questions also on Twitter or on email. I think it's better than Twitter, if you wish. Why did I choose the name? Well, I looked for something nice with force, and this domain name was free. So I bought the domain name and adopted it as a name. It doesn't have any very, very particular meaning, or I like it. Found the domain, since then it's my brand. Thank you with funny image for now. Thank you. Thank you. Do we have meetings? Actually, the idea for this webinar came from a meetup group we have here in Barcelona. It was organized by Francesc, the president of FX Rate. There were already 3 or 4 ones, and we have the next one is going to be in September. And we begin at FX Rate's offices with something more official, formal, with the presentation, and then we continue to have a beer at the bar. How would I best describe myself? A person interested in macroeconomics, publisher, former forex trader, computer geek, I don't know. Thank you very much, guys. On risk management, well, in general, you should know each trade you take, you should know how much of your account you're risking, and the rule of thumb is not to risk more than 2%. That's what I always preach. I've written about it on my website. So, of course, there's much more information. I think there is material for a few webinars. But in general, the short answer was the short answer would be just don't burn your account too fast. Taking less risk each time relative to your account gives more time to learn, keeps things under control, limits emotional pressure. There's lots of information on the web about this. Okay, thanks. Another page. Yeah, I finished. I might get back to trading in the future, but at the moment I don't trade. I'm full-time busy with the website. Perhaps one day I'll take a step back and get back to active trading. At the moment, I'm not trading. Yeah, preserving capital. My trading strategy back then, I would look out for breakouts generally, support and resistance lines. Look for pairs trading in a range, trying to catch a breakout a few pips below, to sell a few pips below or buy a few pips above, putting the stop loss very relatively tight distance back in the range and aiming for a risk-reward ratio of 1 to 3. That was the most common strategy. I did do some stupid stuff like just buy and sell according to intuition, and which of course wasn't wise. And but my basic strategy would be trying to catch breakouts, which is classic thing. Of course, I was hit by false breakouts or put the stops too tight. Sometimes I was successful, of course. Yeah. Favorite pair? Well, of course, the euro dollar is the most popular pair, and I find it fascinating. That's why I did my presentation about it. I think there are, but in technical terms, if you rely only on technicals, I think the Aussie dollar, the Aussie to the US dollar is a better pair. It behaves better. It respects lines in a better manner. Recently, it had a few hammer patterns. Yeah, I burned my account. I burned my account once, and the second time I opened an account, I closed it before it was too late. Yeah. I learned the hard way. I did take out some profits also in the way. Oh, thank you very much. Yeah, I guess I'm better at presenting than trading. Oops, my screen went dark. No, I stopped trading before I met my wife, but that's a nice question. I think at this point, if I would go back to trading, probably have to file for divorce as well. So, I don't know. And I'm sure you guys are better traders than me, better at separating the time frames, dedicating some time for trading and some time for not trading, for doing everything else in life, and life is not only trading. What take profit did you trade? Well, generally I was looking for a risk-reward ratio of 1 to 3. Means time frame on the hourly chart. I mean, I would look at the big picture on the daily chart to see the general trend. But use the hourly chart to place positions. I had a relatively simple, straightforward approach. Not too many additional indicators. With occasional look at the RSI, but not. I think something like 8.5. Oh, thank you very much. 1.5 years in total in 2 periods. Okay, let you go now. Yeah. It's already past our time. Well, thank you very much, everybody, for being here at the presentation. If you have additional questions, you know how to find me on Twitter, on contact form on my website, my email address. And thank you very much for staying this long, everybody. And I hope to see you soon in July. And okay. Yeah, I must go as well. I have guests coming. Okay, so thank you very much. And very refreshing, thanks. And try to keep it interesting.